Americans are in trouble for a variety of reasons, but for now, let's say it's for one reason in particular. More Americans today are behind on their car payments than at any point in 31 years, and the only reason 31 years is the limit is because 1994 was the first year it was even measured. So for all we know, this is the worst it's been in half a century. But the reality is that while this is the fault of the consumer in a lot of cases, you could argue that there are just as many cases in which it really isn't. As with any loan, the repayment process for a car loan is subject to the same factors that borrowers can't control, such as changes in the economy or the job market, and all the while, interest is compounding and the borrower ends up owing more than the initial loan value, all for a car that's depreciated faster than an NFT inside of a timeshare. As car prices continue to rise, it seems almost expected that Americans would struggle, as the market makes taking the Lannister approach to debt resolution nearly impossible. So why is this happening? What actions are car dealerships and other lenders doing to make this situation worse? And what relief might there be for someone who finds themselves in this difficult situation? For this month's Roman Report, we're putting the auto loan crisis under the microscope. If it'll even fit down there. Roman Report at the end of the month, and I make what I want when I feel like discussing cars. A recent report by Fitch Ratings, one of the top credit rating agencies in the world, found that as of January 2025, roughly 6.6% of subprime auto borrowers were past due on their auto loans by at least 60 days. This marks a 31-year low, making it the worst recorded percentage since Fitch first started tracking this data way the hell back in 1994. Great year. Well, except for this. And to further compound matters, this year has seen a 3% increase in borrowers who are 90 days past due, according to findings by the Federal Reserve Bank of New York. So for some borrowers, it's even worse than the national average. This 3% rise in 90-day delinquency is the highest since 2010. And while this only applies to subprime borrowers, or those with credit scores below a threshold of around 640, prime borrowers are still feeling the effects, albeit less drastically, with delinquencies topping out between 0.35% and 0.39% from January 2024 to January 2025. So why is this happening? Well, the Federal Reserve Bank's report comes to the common sense conclusion that, quote, higher car prices combined with higher interest rates have driven monthly payments upward and have put pressure on consumers across the income and credit score spectrum. End quote. However, the findings appear to be inconclusive as to just how this is going to play out long term. Quote, the episode of rapidly rising car prices has had heterogeneous impacts on borrowers who have shifted between used and new cars as well as between loans and leases. These shifts have put additional pressure on lower income and lower credit score borrowers who may have had to opt for higher price used cars over the last few years. Used car prices have since declined from the peak, potentially leaving some borrowers underwater on those vehicles and creating potential repayment challenges. At the same time, the decline in auto prices could imply that the more recently originated vintages of auto loans may fare better as those loans age. End quote. Okay, so in plain English, new car prices going down, even just slightly, means that people taking out a new auto loan today might have an easier time of repayment than somebody who financed back when new car prices were higher. And yet, Even when new car prices go down, cars are still pretty damn expensive, particularly with inflation rising, with interest rates rising, with dealer markups increasing, and then adding on all the hidden fees and warranties you didn't ask for, and other nonsense buried deep within the fine print that could overwhelm even the savviest buyer. And I know the default is to think that this is, at least partially, caused by people who are taking a sort of pie-in-the-sky view towards the future. It's like when you go to college and you take out the student loans to pay for it because you assume you'll make enough in the career you get with that degree to pay it off quickly. But then you graduate and, surprise, the job market is garbage and that degree is worth less than the paper you just used for your post-taco night wipe. But no matter the current market value of that degree, you better believe you still need to have it if you want to work in... Let me check my notes here. Oh yes, entry-level data entry. And in much the same way, millions upon millions of Americans were sold the notion that, hey, just get the new car now. It'll pay for itself over time because it's new. It'll hold value better. You won't need to do as many repairs, and even if you do, you'll be under warranty. And you have 84 months to pay it back. You know, anything could happen in 84 months. You could hit the lottery. You could get a promotion at work. You could become independently wealthy for no reason. You can own it once it's paid off, and then you can resell it for a fraction of what you paid to some guy on Facebook Marketplace who still asks if it's available after you've already agreed on a price. Doesn't that sound better than buying used? And that's the kind of outcome you expect when you wear rose-colored glasses for nearsightedness instead of going to the eye doctor. Even when approached optimistically, financing a new car represents a considerable burden in terms of manageable monthly payments, unforeseen problems, and the rapidly depreciating value that's typical of any car ever made. Because that's what cars do. They run, they take us places, they even provide joy sometimes. And during it all, they lose value. Now, of course, the faster you pay off the loan, the more equity you're going to have if the market value of the car is more than you owe. So yeah, you're incentivized to pay off a new car loan with the quickness, because then you own your car and you can decide what to do with this asset you have, because now it actually is an asset rather than a liability. But the truth for most is the all too unsettling reality that fewer and fewer people are getting to enjoy the experience of actually owning their cars because it's become prohibitively expensive to do so for a wide variety of reasons. For example, I reported back in January about how the technology in newer model year cars report back to your insurance company, resulting in higher insurance premiums even when you haven't been involved in any sort of accident or broken any laws. Those higher premiums mean less money on hand to pay the auto loan, which means risking delinquency and repossession. But there are other factors at play as well. For instance, Cox Automotive reports that new car affordability is the best it's been since the summer of 2021. Yet even as the average transaction price, or ATP, for a new car decreased by 1.3% last month, auto loans actually increased by 5 percentage points to 10.16%. And although the average auto payment went down by 1.1% in February, this still comes out to an average of about $748 a month. A downright menacing number, and it's made worse by dealerships who tack on unwanted warranties and premium services to the loan balance and justify it by saying that if you pay the loan off early, we'll refund you the remaining balance on these premium services. But it's still shady as hell, to the point that back in October, the Consumer Financial Protection Bureau published findings on this and other sketchy lender practices, such as requiring borrowers to make in-person visits to the dealership on 2 separate occasions just to cancel an unwanted add-on. And that's not all they found either. Quote, "The exams found servicers wrongfully repossessed vehicles due to service providers failing to cancel orders to repossess vehicles when consumers had made payments or had obtained a loan deferment, loan modification, or extensions that should have prevented repossessions. Consumer Financial Protection Bureau examiners also found servicers repossessed vehicles without having a valid recorded lien to the vehicle. Some servicers were also misallocating borrowers' auto loan payments, such as applying payments to late fees first, instead of applying to the loan principal and interest, which resulted in borrowers having to pay erroneous late fees. CFPB examiners found lenders misleading borrowers about the chance to qualify for a low interest rate, when in reality the lowest rate offered was more than double the advertised rate. Examiners also found that lenders were knowingly placing inaccurate loan information on thousands of consumers' credit reports. This included incorrect amounts past due for charged-off accounts, inaccurate dates of when borrowers fell behind on payments, and inaccurate actual payment amounts following a payoff or settlement." End quote. In each of these cases, the CFPB issued citations against these companies to make sure this doesn't happen again. But as 2024 rolled into 2025, it became clear that making payments was still a challenge for many Americans, whose payment delinquencies put their cars at risk of repossession. And yeah, the counter-argument is, well, why wouldn't that be the case? Why are you entitled to something you can't afford? You want something nice? Get your bread up! And you wouldn't be wrong to think that. No one is entitled to a car that turns heads. Sometimes the best you can do is a 2002 Toyota Camry, and you gotta make your peace with that. Of course, no shade, this is an amazing car. I'm saving hundreds on fuel economy and repair bills alone. Knock on wood so I don't jinx myself by saying that. But ultimately, while a lot of people are doing their best to live within their means, I don't think I have to explain to this audience, my fine, wonderful audience of car people, and if you're new here, welcome, thank you for watching. I don't think I have to tell you guys that there are absolutely people out there who put themselves into debt in the name of flexing. Because they want to be seen in that new Lexus. They want people to know they can afford that BMW. They want their neighbors to be jealous and set their tongues wagging over that Audi Q5 or whatever it is they think is going to get eyeballs popping. And look, every generation has people who live beyond their means. This is nothing new. But when I think of the people most affected by this auto loan crisis, I tend to picture the couple who purchases an SUV because they anticipate starting a family soon, and they think that they need to lock in the price on that Honda CR-V because the market could change in 4 years and we might not be able to afford this then, and we'll have too many kids for the Corolla we have now. But then they end up only having 1 or 2 kids and discover they didn't really need that much car after all, or the guy, I think about the guy who plans on starting a carpentry business, so he buys that new F-150 or Ram ProMaster to support it, figuring that it'll pay itself off through the business. It'll pay for itself. It'll justify itself. But then business doesn't pick up, and now he's stuck making payments on a work vehicle that he couldn't afford then and really can't afford now. Or I think about the student fresh out of college who just got their first postgraduate job but has no car to get to and from work. So they get a loan for a new car and then subsequently lose that job, and now they can't really swing the car payments anymore. Or I think about, even at a stretch, I think about the guy trying to fill a void because he feels he's behind in life and wants some kind of symbol to make up the difference to all his former classmates on social media, because he hasn't been going to therapy to realize this isn't how individual worth is measured among worthy individuals. And so he buys that midlife crisis Corvette and he gets a couple Instagram likes and then goes right back to feeling like he's being followed by a purely metaphorical and strictly vindictive rain cloud. And yet the answer to each and every one of these is simple, right? Just buy used. Why do you need an SUV for a family that doesn't exist yet? Why does that work truck or work van need to be new? You're fresh out of college. What the hell are you leasing a brand new Audi for? And if you need to impress old classmates you haven't seen in a decade, just get a Lexus from 2016 and lie and say you've had it all this time, as an implication that you've always been doing this well, you know? In most instances, an older used car is I love living by the highway, great. In most instances, an older used car is the financially responsible decision, even if it isn't always appealing in the same way that showroom new Miata might be. And it is true that the average price of a used car is down 3.3% from last year, according to the Federal Bureau of Labor Statistics. But a report by Experian notes that interest rates remain high, averaging at just over 12%. So unless you have cash on hand to purchase that used car outright, you're probably going to need to take out a loan. And I can see the justification in the minds of a lot of people. If I have to take out a loan anyway, it might as well be for something new. I don't want to take out a high-interest loan on something whose condition I can't trust because it's used and has over 130,000 miles or something, if you can even find one for a justifiable price with mileage that low. And if you're going to go with the newer vehicle, you might as well just go with the cool one, right? Nobody wants to pay $700 a month just to show off a Camry, so you get the Highlander, the 4Runner TRD Pro, the new 5 Series, the Ioniq 6. It's a slippery slope, and it leads to financial peril more often than not, because your life has to basically go perfectly for you to continue affording that car. You can't lose that job. You can't have any sudden medical expenses. You can't have any sudden accidents that find you on the hook for an extra mouth to feed for the next 18 years, etc., etc. But is there a possibility here that this is actually the right way to do things? That just getting a loan for that new car is better than doing the exact same thing for something used? Well, it seems that for some people, it can be, weirdly enough. A February article by Consumer Reports, which cites findings by Pat Ryan, the CEO of the car shopping app Copilot, states that buying new might actually be the way to go. And I'll just quote him directly to avoid messing this up, and you can judge for yourselves. Quote, "If you have to borrow money to buy a car, remember that the older the car, the higher the interest rate charged by the lender. New car buyers with good credit can benefit from the manufacturer-subsidized financing offered on some brand new models. Ryan says some manufacturers are offering 0% financing deals again, many of them for new EVs. And with new cars, there's also the added benefit of a fresh factory warranty." End quote. And this just sort of reinforces the obvious findings that people in higher income brackets and those with better credit scores will have an easier time of this than the people who are affected most by high interest loans. Because people with those hard-won advantages are also likely to have greater financial literacy, since it's hard to keep wealth without it. But I would imagine that among the average consumer, there's a general lack of financial literacy when it comes to car financing. Not everybody watches Caleb Hammer. Not everybody watches any of the dozen other finance tubers who will tell you that you don't need to be paying $1,000 every month on a Corvette when you're stocking shelves at DeBrickman's Hardware and Leather Emporium. And not everybody has a parent who understands the financial realities of this generation to be able to provide sensible advice. And not everybody lives in an area with a robust public transit system to where a bus can reliably get you to and from your job every day at DeBrickman's Hardware and Assless Chaps. For some, even those who want to buy that older, cheaper used car but still can't really afford it, there may be no other choice but to take out that loan if you want to have a car at all. And yeah, having a car is a privilege and not a right, but we've also created a society where having a car is kind of necessary. Now, for what it's worth, consumers choosing used cars over new does generally seem to be where the market is headed, as new car sales have decreased while used car sales appear to be gaining back some steam. Data estimates by Cox Automotive found that for February, retail used vehicle sales reached some 1.57 million units, an increase of 16% from January. The article cites their own senior analyst, Scott Vanner, who states, quote, "While the used vehicle sales pace typically increases from January to February with the influx of tax refunds, this year's 16% increase is the largest jump seen in recent years." End quote. This seems to suggest that people are rejecting the new car market in favor of more affordable used offerings, which is a hopeful sign. You know, I'm not an MBA, but let me try and freestyle this because if I remember right, increased new car sales are often one of the signs people look for in order to predict an upswing in the used car market, because it means the used car supply will replenish with new options. But again, if I remember right, which I honestly might not, and if I'm screwing this up, please correct me in the comments, one of the other indicators is actually, weirdly enough, reduced new car sales, because it indicates that prices might come down to match the decreased demand, leading back to more new car sales, which will then replenish the used market. And that's really only one factor, as the used car market relies on other stuff like inflation and interest rates cooling down, and the job market, and the aforementioned tax season, with people deciding to splurge because that refund just came through. Although it seems like the turnaround time for a refund gets slower and slower every year to where I don't know who really has their refund already in February, no matter how early you get your taxes done. Maybe it's just me, whatever. And while it's probably an overly optimistic view, there's reason to hope that the used car market could potentially fix this problem. Well, not fix it exactly, but make it so that fewer Americans end up in delinquency. A stronger used car market means trade-in values improve due to demand, and for people who do eventually pay off their loans, they might see higher resale prices on their cars, not just due to demand, but also due to how used cars generally lose value much more slowly than their new counterparts. And while this isn't true for everybody, and certainly not for every used car, generally speaking, used cars are less expensive to insure than new ones, which means more money on hand, so you're less likely to fall behind on payments, provided you're a safe driver. And really, I'm just spitballing here because I'm carrying water for used cars and for people whose financial situation isn't the greatest. People who have made good faith efforts towards repayment. People who maybe got in over their heads, who genuinely may not have known better. The minute we stop having empathy for each other, that's pretty much a wrap. That's the day we need to pack it up, because what are we even doing here if all we have to serve each other is judgment? Wait a minute, I'm short. Why am I 6 inches taller? Oh, I didn't see this soapbox underneath me. 1 second. There we are. Now, if you find yourself behind on payments, what can you do? Well, my mom always told me that there's always somebody to call for information, somebody you can work out a deal with, somebody you can make a payment plan with. Because they want to be paid. It's not like they want to come and repossess your car. It's they want something, and tell them you can give them something. But then, I don't know that that's the case for every situation, and since this show isn't about relaying to you things my mom told me, you want that, you gotta go to the second channel, I'm going to look to this New York Times article by writer Ann Carnes, citing advice by the Federal Trade Commission, and Mitria Spotzer, the Vice President and Federal Policy Director for the Center for Responsible Lending, who all basically sound like my mom. Because right here, their advice, if you believe your car has been mistakenly repossessed, call the lender, call a lawyer, call your consumer protection agency or your state attorney general. Literally, just call somebody. And I'm telling you, it's something that stresses a lot of people out. But more often than not, calling somebody, even if you have to wade through a Byzantine labyrinth of automated menu options, can alleviate so much pressure because you can ask questions, get answers, and start formulating a plan. But before it even gets to repossession, much like my mom, they advise calling the lender and trying to make an arrangement of some kind. Which is not to say you should offer them your firstborn or a trip on the good ship Disappointment, but you should call to see if you can get an extension of the loan in order to keep the car, or possibly even delay payment for a brief period. And if refinancing isn't your bag, you can try to sell the car on your own and use the proceeds to pay off the remaining balance. This is not financial advice because I don't know the first thing about giving actual financial advice, but I can relay information from other sources and you can do with it what you want, or not do anything with it at all. Because if I can't guarantee you anything, I can guarantee you this. You will not have any judgment from me. Now, there's also a less known option, which is that of voluntary repossession. Because your credit score is going to take a hit either way, but it'll take less of a hit by just voluntarily offering your car for repossession rather than an involuntary repossession, which could hurt your ability to qualify for other loans in the future. But as with any approach, these all include some form of risk, and none of these are perfect fixes. They don't make the debt just disappear. But it can provide at least some measure of relief for when the situation snowballs and becomes overwhelming, if it hasn't already. Ultimately, auto loans are always going to be a problem in some cases, because there will always be people who live beyond their means, but not everybody affected by these loans are people who are living beyond their means. Some are just modest, everyday people trying to make it in a world that's increasingly hostile to financial stability, much less prosperity. And I don't think we should take the mindset that everyone who finds themselves in this situation must have been careless and irresponsible. Because while some of the issues leading to the loan delinquency can be pinned on consumers, some of it is dealerships, some of it is the economy, some of it is the job market. Sure, it's not as big of a crisis as, the housing bubble was in 2008, but a disaster like this is going to have more potential fathers than your average taping of The Maury Show, and any solution is going to take a village. And I guess in lieu of a more concrete solution, I would just encourage empathy as people try to figure it out. But what do you think? Why do you think things have gotten this bad? What do you think the solution could be? I want to hear your thoughts in the comments. Be on the lookout for me. My screen name's Limited Time Roman. It's this fun little hobby YouTube channel I run with my nephew, where we review weird limited edition foods and talk about all sorts of, it's talk about Power Rangers and Drake and other things. I don't know. It's really fun to me. But that's the screen name I'll be using down there, so be on the lookout. I love interacting in the comments section of my videos. And if you liked this video, consider supporting us on Patreon, where you can get videos like this and so many others early, in addition to exclusive content that will never be uploaded here. It's just $1 a month, and it can help make more videos like this possible. Be sure to like, comment, or share the video with someone who you think might enjoy it. And please subscribe and tap the bell icon so you're notified for every new video. Lastly, for any new orders placed in our merch store, linked in the description or in the product shelf below the video, I'll send you a personalized thank you video. Thank you so much for watching. You make this all possible, and I'm grateful every single day. Have a great rest of your week.
Hello, you've reached the end of the video. I'm proud of you. If you come this far, I know you want to go farther. RCR's Patreon has tons of more content and all the stuff that I can't get away with on YouTube anymore. It's fun, it's bawdy, and it's extra dirty. And for $1, you get all of it. That's it. Less than the cost of a Costco hot dog. $1, you get double the content. You know what else? If everybody who watched this video joined our Patreon, RCR would be unstoppable. There's no telling what we could do with your support. So please, go to the Patreon, join it. It's only $1. Thank you so much, and thank you for liking Regular Car Reviews.